Hi everyone, in this video I'm going to be showing you what I think are the 3 most undervalued stocks to buy right now in September. So before we start this video, I want to give a huge thank you to everyone for helping me get to 25,000 subscribers. This is definitely a huge milestone and one I definitely did not expect to hit. So as a thank you, I'm giving away a guide I created on how to find under the radar, undervalued stocks. I always get a ton of questions from people asking how do I find these unique stocks picks that aren't really talked about anywhere else, and pretty much all of the stocks I've talked about on this channel I've found using one of the methods in this guide. So it'll be the first link in the description. It's completely free. All you have to do is put in your email and it'll take you right to the guide. This guide I made is around 20 pages and it's jam-packed with value. So make sure you check it out right now. And all of the stocks in this video I found using those methods. Now, as always, this is not financial advice. I'm not a financial advisor, and these stocks are just interesting picks that I found that I think have the potential to provide a pretty good return going forward. So let's get right to those stocks. The first stock we're going to be talking about in this video is MTY Group. This is a Canadian food company that trades in the US. Their ticker symbol is MTYFF, and MTY Food Group is one of the largest restaurant operators in Canada. So right now we're on the company's investor presentation from their investors relation page, and we can take a look at specifically what they do. So the main strength of this company is growing through acquisition. So what this company does is they buy up a bunch of smaller food brands and consolidate them all under their MTY Food Group brand. And they have a strong record of growth with a disciplined acquisition strategy, and this has resulted in strong cash flow, revenue streams, and a diversified portfolio. Now, if you take a look at their track record, it is very good. You see revenues, EBITDA, income, free cash flow, EBITDA, and margins all generally increasing, which is a great sign for a company like this that does grow through acquiring other companies. And so here's their breakdown. They are a Canadian company, but they also have a good amount of restaurants in the United States and internationally. So MTY Food Group has a ton of brands under the company. Here is a list of all of them. Just recently they acquired Papa Murphy's, which is pretty popular in Canada. They have a very diversified portfolio of different brands across different types of foods. And so I think that's what gives MTY Food Group their competitive advantage. It really protects from shifts in consumer preferences, because whatever type of food customers want, MTY is going to have brands that serve that customer group. Now, if we take a look at MTY Food Group's fundamentals, this is on Philtown's Rule 1 website, and we can see the growth rates for this company over the past 10 years have just been outstanding, where we have double-digit growth rates in the book value, the dividend, earnings per share, sales, operating cash, and they also have a very high return on equity, averaging around 15%. Probably the main concern for this company is the debt they have. They do grow through acquisitions, and they mainly finance their acquisitions with debt. So this is a company that takes on debt to buy out other food brands, and while this has definitely worked for them in the past, this debt level is something to keep an eye on to make sure it doesn't grow too big. So if we take a look at the share price, here's what it looks like, where obviously the great track record of growth will result in great investment returns, and then we saw the stock price crash due to the pandemic, and a lot of this company's restaurants are in places like mall food courts and strip malls. So because of that, this was one of the harder hit companies from the pandemic, and their share price has started to recover. If we take a look at their valuation, their free cash flow yield is around an 11% right now, which is very good for a company that's growing as fast as this. 11% free cash flow yield is pretty much as good as you're gonna get. So this is a company I'm looking at. I haven't bought yet, but they definitely are an interesting pick. The only question with this company is they've had the strong record of acquisitions in the past, but can they keep that going in the future? Maybe in an environment where demand for restaurants in places like mall food courts and in strip malls isn't as high as it was in the past. So that's really the question to answer for MTY Food Group. And if they do resume the incredible growth they've had over the past 10 years, I expect this stock to do very well. So the next stock we're going to be talking about in this video is China Index Holdings. Their ticker is CIH, and they are the largest real estate information and analytics platform in China. So they have database analytics, promotion, and listing services for China's real estate market. So you can basically think of them as like a huge Zillow for the Chinese real estate market. Now, this company does have a pretty interesting history. They were spun off from a different company, Fang Holdings, which also trades in the US. And the reason that this company was spun off is because they look incredibly undervalued, and that value wasn't being recognized while it was a part of this other company. So they spun it off in hopes of it receiving a higher valuation trading on its own. So if you look at some of the fundamentals of China Index Holdings, they are an incredibly undervalued company that's growing very fast and has an extremely strong balance sheet. We can see they have absolutely no debt. Their debt to equity is a 0. Their price to cash is a 2. So that just speaks to how undervalued this company is, where you have a profitable company that's trading at only 2 times its cash per share. And then you also see things like a 43% profit margin, which is common in software companies, return on investment, return on equity through the roof. So obviously finding a software company at this valuation is extremely rare. And we can take a look at their revenue and earnings growth, both on the top line and the bottom line. Revenue and earnings have both been growing very consistently over the past few years. Then we can also take a look at things like operating cash flow and free cash flow have both also been growing at very high rates. So if you take a look at the valuation of this company versus other software companies, this is the cheapest valuation you're going to get if you look at anything, the PE ratio, price to free cash flow, and then if you also look at things like even price to sales and things like enterprise value and EBITDA. This is probably the cheapest software company out there you're going to find that is still growing as fast, if not faster, than other software companies. Now, obviously, a reason for this undervaluation and a big concern for investors is this being a Chinese company and a low market cap, sort of small cap Chinese company, where obviously there's a lot of concern about fraudulent financial statements and the type of regulations in China being different from the rest of the world. So that's really the main concern for this company. Now, there have been a lot of articles written about this stock recently, and some people have gone super in-depth, actually going to China and talking to different customers and different lenders and things like that, and they all have very good things to say about China Index Holding and their management team. So I highly recommend you to research this stock on your own if you want to dig more into it. But the fact that this is a smaller Chinese company is definitely the thing that is really holding me back from buying right now. I'd really have to understand the people behind this company and the management team and really be confident in them before I put money into this. So that's really the biggest risk for this company, just because what you're buying this company for right now is a steal compared to what it will be 5-10 years down the line. Now, the last stock we're going to be talking about in this video is Micro Focus. Their ticker is MFPG in the US markets, and they are one of the largest international software companies in the world. They're a company based in London, and they provide software services to companies internationally. Now, we are back on the Rule 1 website, and again, this is another company with an incredibly strong history of growth. And so this is a company that grows through acquisitions, much like MTY Food Group. They find these smaller software companies and acquire them, and then they either roll a bunch of these companies up and sell them for a profit, or they will keep them and use it to upsell current customers they already have. And so this has historically worked out very well for the company. Now, this company's stock price has fallen off a cliff. Back in 2018, they were over $40 a share, and right now they're under $4 a share. So they've fallen over 90% in the past 2 years. And the reason for that was one bad acquisition that they made. Back in 2017, Micro Focus merged with HP's software business, which was a massive merger at the time. And that made Micro Focus one of the largest software companies in the world. Now, even though there was a lot of potential for this merger, it hasn't really been working out. And there's definitely been an impact in terms of debt levels and falling revenues and income. Here's an article from Bloomberg talking about some of the issues, where we now see issues integrating this with the rest of the company. So now we see things like falling revenues, falling earnings, and they took on a bunch of debt to make this acquisition. So if they can't get those up soon, it is a huge concern for this company. Where we can see things like the revenue has been falling and net income has fallen off a cliff, and we saw a huge loss in the first quarter of this year. We also see debt levels spiking up as a result of this acquisition. But this is an interesting pick, because in the event that this company was turned around and they found a way for the two companies to work successfully, or were able to sell the HP business to someone else, that could be an incredible catalyst for this company to skyrocket. Where the valuation right now, their forward PE is under a 3, which really is unheard of for a fast-growing software company like this. So for this company, it's definitely a turnaround play. If you do think that the company will be able to integrate HP and figure out the problems they have, then this stock could give you a huge return. I know they just hired a new CEO that came out with a new plan to turn around the company. So that is definitely something to look into. And if you believe in the direction he would take this company in going forward, this is one that I've been keeping my eye on. I haven't invested in them yet, but I am looking into them, looking at the business a lot and what their plans are on turning this company around. And if I do think they have a good chance at going back to the profitability and growth they had in the past, this is a company I am thinking about buying. Again, it's mainly a turnaround play. In the event that they do not and the company keeps struggling, they're really going to suffer with the huge losses they're taking and the high debt levels they have. So that's it for this video. Those are the 3 stocks that I think are the most undervalued right now in September of 2020. I haven't bought any of these yet, but I am looking into them since they are all extremely high quality companies with good management teams and a strong history behind them. Let me know what you think of these picks in the comments, and don't forget to pick up my free guide on how I find stocks just like this one. It's completely free and it is jam-packed with value. So go click on the first link in the description right now. If you found something of value from this video, hit the like button, subscribe to my channel if you haven't already, and I'll see you on the next video.